Mining Network's coverage of PDAC is brought to you by Tudor Gold.
Hello, welcome back. We're at PDAC and I'm with Peter Krauth, the author of The Great Silver Bull and editor of Silver Advisor. Peter, good to be with you.
Thanks so much, Peter. Nice to be here.
Look, your first time on the channel, so why don't we just go a little bit into your background?
Sure.
Tell us a bit about your book, tell us a bit about what you're up to these days.
So I have another newsletter, which you didn't mention, called Silver Stock Investor. That's a paid newsletter. I launched that 4 years ago. And then about a year into that, this would have been actually a few months into that. So this was about a year into COVID. A former colleague had been egging me on to write a book. And so I thought, we're in the middle of COVID. No one's going anywhere. It'd be a shame to let a pandemic go to waste. I'll write a book, finally do it. So I put about a year's work into that. It was way more work than I ever thought, but it has paid back in many different ways, paid back very well. And so the whole idea behind it was to provide people with an introduction to silver, and in kind of every aspect of it, both historically and then economically and then fundamentally on the supply-demand side, and then how to invest in it, and ultimately how and when to sell your silver and your silver investments. So that's sort of a big picture, and if somebody wants what I think is a pretty good introduction to silver itself and what I call a generational opportunity, the book is a great way to gain that kind of knowledge. And so the newsletters are a way to what I would characterize as following the silver market in on a more of a real-time basis, and what's going on sort of on a day-to-day, week-to-week basis. And so I started the paid newsletter about 4 years ago, and the book was launched, as I say, the book was launched about 3 years ago. It's done quite well, and it's just opened a lot of doors, and it has me traveling around and speaking about silver and the opportunities that silver offers.
Where do you think we are at the moment in the silver cycle? I think we're around $31, $32 at the moment, right?
That's right.
Some argue silver to gold ratio should be higher. Some argue it's probably about right. Where do you think we are?
I do think that it should be higher. The gold ratio is out of whack. Gold-silver ratio is out of whack as far as I'm concerned. So for anybody watching, the gold-silver ratio is just very simply dividing the gold price by the silver price at any point in time, and it tells you how many silver ounces you require to buy 1 gold ounce. And right now it's about 90 or so.
Yep.
And if you look over the last 40, 50 years, it's been closer to 55 or 60, which is probably, I think, where it's going to go back to. And what we have seen is multiple times in these previous decades, is if, not necessarily, so it's no guarantee, but if you do see the ratio drop below 80, meaning silver is catching up to gold, fall below 80 and to continue to fall, it's a good sign that we're going to see silver continue to do very well. And in fact, it's not a reason not to own gold, because in that kind of environment, gold actually also does quite well. So both move higher, it's just that silver moves higher faster than gold and catches up. So, if you were to see it go back down to much more typical historical ratios, like I say 50 or 60, you could see, and that would be if gold stayed put, which I don't expect to happen. You could see silver up by 50% or more in short order. So on that basis, I do find it cheap. On all sorts of other metrics, I find it cheap. Fundamentally, if you look at supply-demand, we're consuming way more silver than we're producing every year. So just sort of easy round numbers are that the supply is about 1 billion ounces a year. Of that, about 85%, so 850 million ounces come from mining. About 150 million ounces come from recycling.
Yep.
And the consumption or the demand is about 1.2 billion ounces. So we're short about 20%. And we have been short the last 4 years. 2024 was the 4th consecutive year of a silver deficit. And the Silver Institute thinks we're going to see the deficits continue for at least another 5 years, and that we could see record deficits at some point in the next 5 years. So the picture is not only not changing, but it's getting, well, it is actually changing. It's getting more bullish, frankly, for silver.
That's interesting. So how much of, obviously there's a lot of silver stockpiled for investment purposes.
Right.
How much are we starting to see now that of that 100, was it 1.2 billion demand that we're seeing?
So no, it's several billion. In fact, it's probably more like maybe 3 or 4 billion. But what we've seen in the last 4 years, and this is what I think we've started to see happen, and one of the reasons that, because people have, myself included, have always wondered, let's say for the last 3-4 years, is if we're in a deficit scenario, why is the silver price not rising if we have to get the silver somewhere, and there should be this upward pressure on the silver price because of a shortage type scenario. And so last year around this time, I had been doing some research, and I started looking at the inventories at the LBMA, at the COMEX, and the Shanghai futures exchanges, which is where you have really the three largest sort of identifiable above ground inventories of silver. And starting back in early 2021, we see these inventories really start to draw down quite significantly. And so if you look at the silver ETFs, for example, in the last few years, until about last June, they were also dropping. So the share price of the ETFs would have perhaps stayed stable, but the amount of silver that they owned backing their shares was dropping, just because there were more sales than purchases of those shares. So it's a technical thing, but they have to sell off their silver to match the number of outstanding units that they have. And I think that in both cases, what you had was mostly industrial consumers of silver.
Yep.
Were saying, okay, I need to get some silver badly. Where can I find it? And so they've been able to tap into these above ground stockpiles at the futures exchanges, and to use the silver ETFs that are backed by physical silver, own long contracts on the futures exchanges, let them reach maturity, and say, I will take delivery now of the silver that backs this contract. Do that month in, month out. Also buy the silver ETFs and turn around and say, okay, there are minimums to be met, but industrial players with large, deep pockets can do this. Say, I own so many units of this silver ETF. I'd like to take delivery of the silver that backs it. So they've been able to tap these secondary above ground supplies, which didn't put pressure on the miners to bring more silver to market.
Yeah.
So you could have the silver price kind of stay stable and move sideways, and yet still meet deficits this way, draw down the inventories. I think that game is coming to an end.
Well, I guess that's the question, isn't it? How long
Right.
can that continue for?
Funny enough, because last year, almost around this same time, it was when I was saying, I kind of figured this was what was going on. And then TD Securities had come out with a very, very similar report saying we've got about 12 to 18 months before this finally plays out. And and so interestingly enough, some research from S&P Global Intelligence looked at silver from primary silver mines, and they don't think that we're going to, over even the next 2 or 3 years, see the 2016 mining silver supply highs be taken out. They're going to either stay flat or continue to fall. So we've seen demand rise, and silver from silver mining actually fall for the last 10 years. So it's a very, very bullish scenario.
Yeah, what's the breakdown of the demand now? Because obviously, and I guess even going back to the original question of silver gold ratio, how relevant does that ratio become moving forward as we see more and more industrial demand for silver?
Sure. So if you look at industrial demand, roughly the breakdown, just for sake of ease, is about half and half industrial versus investment. And that's something interesting that makes silver completely unique to really any metal. You can argue that to maybe some extent for gold or platinum, but really silver is really the only metal that is two things, money and an industrial metal. And so what's interesting too is that we've seen over the last 10 years or so, the demand that has come from solar in particular has essentially tripled. Solar has now become the single largest demand source on the industrial side. 20% of all industrial consumption goes to one single application, which is solar panels.
Oh, okay.
So it's really been a huge driver of silver consumption. And this is not like investment demand where, you could technically say, well, I mean, you can't, because if people really want to own silver, they're going to go and buy it, and they may have to pay more for it, but somehow they'll get their hands on it. The industrial consumers need it because they're producing things. Unless the economy turns awful, production needs the silver absolutely to continue supplying. So we've seen actually industrial demand has, as in the last few years, gone from about 50% of the market to 60% of the market.
Okay.
And it's squeezing the demand side, the investment demand side.
Yeah.
So again, that ebbs and flows, and it has ebbed for a little while, but when it flows, when the investment demand comes back, it has tended to come back in a very, very strong way. And I call it sort of the wild card in silver, because it's what really drives the silver price. I kind of look at it this way. The industrial demand provides a rising floor under the silver price, so it's sort of steady as she goes. And we see these steps, like a staircase. You see the silver price move up and then kind of move sideways within a range, and then you get this shorter time range where things drive it and it moves higher again, and then it kind of moves sideways again. So that's more of a steady climb and support for the silver price, but it's the investment demand that when it comes in a big way, it drives these spikes in the silver price. And one last point, if industrial demand stays where it is and continues to consume 60% rather than 50%, that means there's less silver available for investment demand.
Yeah.
So imagine what happens when investment demand does come back in a big way. There's less silver available to supply it.
It sounds like you don't even really need investment demand to come back in a big way, though, in the
That's
scenario
true.
that you're outlining. If we're seeing above ground stockpiles reducing, and we're also seeing this delay in new silver projects coming online, I mean,
Right.
It hasn't helped, obviously, that Mexico over the last couple of years hasn't really
Absolutely.
given. They're starting to issue potentially some new permits now, but this has a knock-on effect of a few years to build these mines. So, in a way, it sounds a bit. Saying that stockpiles potentially could run out within the next 6 months, then obviously having a supply shortfall and no way to fix it. It sounds like there's no other opportunity other than for it to go up. I mean, what risks are there that we're reading the signs wrong here?
The guy on screen, that's me, Ken Conkin. I'm the president and CEO of Tudor Gold Corp. I co-discovered the Brucejack mine in Canada's Golden Triangle with my colleagues Joe Ofsnick and Ken McNaughton. And in 2021, Brucejack was purchased by Newcrest for $2.8 billion. We have reassembled the team, and we have made another significant discovery just 15 kilometers north of the Brucejack mine. The Goldstorm deposit today hosts approximately 28 million gold equivalent ounces, including close to 3 billion pounds of copper, making it one of the largest copper gold discoveries in the past 30 years. Initially, Goldstorm appeared to be a large-scale bulk tonnage target. However, recently we had a major breakthrough when we discovered a new complex carrying high-grade gold, hitting in excess of 20 grams per ton gold with intercepts of over 25 meters. Visible gold observed throughout the core suggests the possibility for excellent gold recoveries. Our next steps, it's all about high grade, and more high grade. We plan to expand and explore the potential of this new spectacular high grade gold system, which initially was one structure and is now 4. The history of the Brucejack story seems to be repeating itself. We believe we are on the pathway to demonstrating another multi-billion-dollar project in the Triangle. We would be honored to have you follow the journey as we intensify our exploration efforts in 2025.
The only thing that could, let's say, sort of throw a wrench into there are 2 things. One is that you have a dramatic economic slowdown, which would potentially ease up on the industrial demand side of it. So that's one. I'm not convinced that we'll see that. I think that if you look at COVID, if you look at the financial crisis, governments step in a very big way and very quickly, and they print money and they stimulate and they try and patch it up and try and get the economy going again. So I would expect nothing different this time.
Yep.
The other, let's say, risk is that there are what we call unidentified or unidentifiable above ground stockpiles.
Yep.
So what we can quantify is what's on the exchanges. What people own privately is what we can't judge. We can assume it's several billion ounces, probably at least. So some will argue that can help meet supply, and it can. I don't deny that. My point, though, is that I believe a lot, not all, but a lot of that silver is very sort of tightly held, in the sense that it's widely distributed, but those who own it are not going to part with it at $30 or $35. It's going to take much higher silver prices, and I think that's what probably those who argue for this supply coming to market to meet otherwise unmet demand are missing, and I think that it will take much higher silver prices for these people to be willing to part with their silver.
Yeah, at what point does the silver price become too expensive for the industrial demand, for them to then start seeking substitution of silver into other metals for electronic devices or whatever it's being used for?
Right.
And I guess in some applications, can you even replace the silver in, say, a solar panel with something else?
You cannot.
You can't, no.
You absolutely cannot.
Yeah.
And so there are always, new technologies that are being tested, and when, we hear about them and some people get concerned, but often these things are a decade or more away. Some are trying to use copper. There are other things that are being investigated as well. There's always thrifting going on to try to consume less silver because it is a cost component.
Yep.
The copper, from what I've seen and read, is not of concern. It's not as efficient. The panels don't last as long, so there's that. And now you've got things like these solid-state batteries that Samsung has developed. There's not a lot of information about them. I've seen rough guesses as to how much silver they would require.
Well, that's interesting. I've started hearing a lot more
Sure.
about this silver battery.
Right.
If you have any estimates
So the estimates that I've seen are anywhere from, say, 100 grams to a kilo of silver per vehicle.
Okay.
So that's
a
pretty
wide
substantial.
variation of,
It is,
yeah.
and that's because Samsung is not saying how much silver they use in their battery, which
Yeah.
I don't blame, frankly, right now. I
Yeah.
keep that close to my chest as well.
Yeah.
But no doubt it's a substantial amount. I don't think we're at a point where we can see that making a big dent in the silver
Not yet,
market
no.
for a few reasons. Although the battery looks very attractive, because one is it more than doubles the range of a vehicle from the current, say, 400 miles or so, 400 miles to about 800 miles.
Yeah.
The recharge is 9 minutes as opposed to hours, which is almost like going to a gas station and filling up.
Go get your coffee and it's done.
Exactly. And so, the battery life is more like 20 years rather than 8 or 10 years. So,
I guess that's because silver doesn't corrode and corrupt as easily
exactly.
as other metals.
And so it has really the potential to be a true game changer. Now, Samsung themselves and others have said, look, this is going to be expensive, like any new technologies.
Yeah, of course.
We would expect it to be part of higher end vehicles to start with. But if this is adopted quickly, because the features are just fantastic, then and as it's more readily adopted, you get the economies of scale. You can produce this in larger quantities. The prices come down, and then it becomes more commonplace. So you have all these things happening. If you look at solar panels, for example, so the main technology right now is PERC. That has changed actually in the last couple of years very quickly. These are all acronyms. TOPCon is the next one, the next sort of newer technology. And within a matter of a few years, TOPCon has gone from about 10% of new production capacity to about 65%. It took 2 or 3 years. It was so quickly adopted. But the interesting thing about TOPCon is it takes 50% more silver per panel to use the TopCon technology. So you'd ask yourself, well, why are you using more silver? It's more expensive, but it's the energy output which justifies more silver. And then the next technology is HJT, and that takes up to 100% more silver than the current dominant technology. Again, more energy output for a bit more silver. They're more expensive to produce, but it's justified through higher energy output. So these things bode for more silver consumption rather than less. So it's really, again, I'm not trying to paint a picture that's only rosy, because there are all sorts of things that can happen, but really, on balance, all of the indicators are that, or nearly all of the indicators are that, we have a secular bull market in this metal.
Interesting. Okay. One of the things that we saw with tin, for example, tin solder, obviously when the EU rejected lead and we started seeing that being introduced, we saw a big spike. But and then as we started seeing this new generation of different technologies coming through and whatnot, what we saw with every new iPad or new phone is we started seeing less and less tin being used as a solder, right? Is that one of the big risks that we are going to see? Obviously, solar and potentially batteries are out of that equation, but for everything else, is that a risk for silver?
I don't think so, because there are two things to consider. One is that it's the single best electrical conductor. So you want things that work well and that are efficient. Just to sort of sidetrack a little bit, there's obviously this whole AI thing that's this new big thing. Well, this requires faster and more sophisticated chips, and these require silver. So, these things have to have the capacity to generate. And then the other aspect of the electronics is that vehicles, for example, regular vehicles that are becoming more and more computerized, EVs even more so, they require a lot of silver because of all of the computers inside the vehicle. But the interesting thing is that the silver in almost each case is used in such small quantities that, one, there's no great substitute for it. And two, because the quantities are so small in each individual application, it just makes sense to keep using it. It's very efficient and very effective. And it's also, if you look at things like on-off switches, for example, or if you look at, like I was saying, these chips in computers, it's a very, very efficient metal. On-off switches, it can go through, tens of thousands of uses before these things start to fail. So people want, obviously, their electronics to work, to be dependable, and it remains the answer.
Interesting. Okay. All right. No, because I like quizzing when people are bullish. I like to see if there are any holes in the theories.
Sure.
Right. Obviously.
Of course.
Because I think I get very carried away a bit too easy sometimes myself.
Right.
So in terms of with your newsletter and with your research, do you give any price forecasts? Have you gone down that line?
Yeah, absolutely. So, last year silver in late February was about $22. It ran to $35 by October. That's about a 40% gain over maybe 6 or 7 months. And then we pulled back to 32. That was not surprising to me. That needed to kind of be digested a little bit. We've been consolidating, and I think we're going to revisit 35 probably before mid-year.
Okay.
And I think the setup is strong enough right now that silver follows gold. The ratio is already quite high. I would say unreasonably high. I don't see it really necessarily going much higher, especially in a sustained way. So if nothing else, silver needs to kind of at least keep up with gold. Gold makes it through 3,000. That's a few percent away from where it is right now. Very, very reasonable and attainable.
Yeah.
I think the 3,000 level is an important psychological number. It's going to draw a lot of headlines.
Yep.
You're going to see the generalist investors start to pay a lot more attention to gold and say, well, maybe I should own some gold. We know a lot of physical gold's being sold. Costco's selling about $100 to $200 million per month of gold and silver.
Costco alone, are they?
Costco alone. Walmart is in the game as well.
Yeah.
And so these are great indications that the generalist investor is starting to pay attention. And, if you see gold going through 3,000, I think a lot of people are going to really click and say, geez, maybe I should own some of this, and see gold at 3,000 and say, wow, that really is kind of expensive. What am I getting? I'm getting 1 ounce of gold.
That's the thing. I think if you're a generalist or a retail investor, does that 3,000 number actually put you off rather than
Potentially.
attract you?
Well, you could make the argument both ways.
Yeah.
Look at tech stocks and how the Magnificent Seven have run, and the higher they go, it seems like the more people get interested.
Yeah, true.
And so you do have that to some extent in precious metals. It gets people excited, and unfortunately, they're not buying wisely. They're buying near all-time highs rather than buying when things are more depressed, which is the lower risk way to be buying things. But nonetheless, I do think that there's this FOMO, fear of missing out, that draws people in. They'll see gold at 3,000. They'll say, wow, what are my alternatives? And silver has always been that natural alternative. And if you can get, if gold is 3,000, silver is, let's say, $40 at that point, and you can get way more silver in terms of ounces for the equivalent of $3,000, it's going to have a lot of appeal to people. And it's a very, very small market. It's a tenth, maybe the size of the market of gold. And so, not that much money is required to get the silver market to move. And so it's driven quite quickly. And that's one of the reasons it can be so volatile.
Okay, interesting. So, say for example, we're having another chat this time next year at PDAC. Could I push you for what you think silver might be then?
Sure. I mean, if I'm looking out a year from now, I could easily see silver in the low 40s, maybe even 45. And I think there's a reasonable chance next year. Maybe it'll need to be the year after, so 2026, 2027. But I think within a couple of years, we could see the $50 mark, that all-time high taken out. Interesting to note, I'm not a chart technician, but I do follow some of that work. And the best of these people are calling silver one of sort of modern history's all-time most compelling technical breakouts. It's one of the only assets that has sort of taken 50 years or more to best its all-time high. If you look at the prices of metals, all the base metals, the precious metals, even some of the platinum group metals in 1980, silver is still the only one that has not surpassed its 1980 high. All of the others are well beyond that. So the upside is very compelling.
I think as well, it's just with inflation over time, it's inevitable that a
There's
metal
a lot
will
of
eventually
catching up.
catch up with its
That's
previous
right.
high,
If you
right?
use just government CPI numbers, the inflation-adjusted price of silver from today, if you look back at the $50 peak in 2011, would be $65 today.
Yeah.
The 1980 peak at $50 would be $145 today. So, in my book, I call for ultimately, in sort of a mania peak for silver, I'm calling for potentially a $300 price of silver. I'm not saying it'll go there and stay there, but when I wrote the book and did the research and I said, okay, if I'm looking at an entire bull market, the whole cycle, and where could silver ultimately peak? So I said, okay, I'm not going to just pull a number out of a hat. I'm going to look at what history has done and what that projects. So you certainly have to make assumptions. And one of the simpler assumptions, I guess, or the easiest things to kind of point at and understand is the gold-silver ratio, which we talked about. And that ratio bottomed at 15-1 in 1980 when gold hit $850 and silver hit $50. So my peak, my target in gold has been for probably more than a decade, about $5,000. And that sounded crazy that long ago. We're more than halfway there now. We're nearly 60% there. So it's not sounding so crazy anymore. In fact, I think it could go to 10,000. But if we use 5,000, so that's an assumption. But if we did also see the ratio go back down to 15, which I think it could do in a mania phase, that would be $333 silver.
Do you not worry about what sort of world we'd be living in if gold was at 10,000?
I do.
It'd be a pretty horrible world.
I completely agree.
Yeah.
And it's funny because about 15 years ago, I was talking to a banker, and we're talking about precious metals and where we thought things were going. And so that was 15 years ago, and I said, oh, gold I think is going to go through $2,000. And so it did that quite a while back. So he thought it was crazy and said, geez, gold's $2,000. Do you want to live in that world? And I said, well, honestly, it may not be great. I don't know for sure what things will be like, but I would much rather own the gold in that scenario than not own any gold in that scenario.
Yeah.
So that was my answer, and I still feel that way. Things will probably not be great at $5,000 or $10,000 gold, but would you rather own some at that point or not?
Yeah, well, it's the everything hedge, right?
This is it, exactly.
Yeah. No, Peter, really appreciate your time. Thank you.
My pleasure. Thank you.